Right, moving up and traveling high up in the Peruvian Andes, where I'm talking to John Black, the CEO of Regulus Resources, a copper gold development company. Company's listed on the TSX Ventures Exchange and it'll take a symbol REG, so REG. We're an average of about 74,000 shares trade each day with a 52-week high of $1.60 and a 52-week low of $1. Of 69 cents alone. So that would have been weird. Anyways, market cap just of about $190 million right now and about 125 million shares outstanding. That makes this about a $1.55 stock, I believe, last time I checked. Let's call it $1.50, depending on the time when you're watching this. So right up there, close to its 52-week high. Adding the little options left on the table here, and that gets us to 136 million fully diluted shares. There are a couple of names on the share registry that you would recognize, including a 16% ownership by Rio Tinto and an almost 22% Route 1 ownership, with management owning about 11% of the company. As of the last interim financial statement, which is dated December 31, the company had about $16.7 million in current assets, about most of which, the vast majority, $16.5 million of which was actual cash. The cash sat on the balance sheet against short-term account payables of about $770,000 and no long-term debt outside of the decommissioning liability that companies are required to build here. That statement tells me that Regulus spent, on average, over the last 3 reported months of fiscal 2023, about $190,000 per month on operational expenses. That includes travel, management, marketing, conferences, legal fees, and so on and so forth. And they spent about $330,000 on exploration and evaluation, with the majority being spent on labor and field operations. Overall, that's a G&A, that's an exploration to G&A ratio of 1.73, which means that G&A represented about 36% of the overall cost here. And remember, this is only that snapshot of a 3-month period. So please do head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers and official news releases for yourself, because this is obviously a non-revenue generating company that relies on public markets, which means these numbers might be different by the time you're watching this. Boring stuff aside, though, this is a well-known development story, so I won't annoy you with too much of my voice here. No barbecue analogies in this one. Regulus owns the AntaKori project, which is at an elevation of about 3,500 to 4,000 meters, reachable by a paved road, and also right next door to 2 operating mines. Interestingly, and this is an important part, as you'll see furthermore in the conversation, but that's going to be an oxide heap leach mine expected to turn into a sulfide mine sometime after 2027, as well as a sulfide mine on the other side that runs out of tailing space in 2025, which means that the mine will be closing down if Goldfields, the current operator, doesn't find more ore. Wink, wink, cough, cough. Now, when I say that AntaKori is right next door to these mines, I'm not joking. Like, it's right next door to it. You're probably seeing a map on your screen right now. But it is believed that AntaKori shares its deposits with the Tantahuate project. That's a mouthful, but that's the one that's currently mining oxide gold, but will start mining sulfide soon. As again, you can probably see on the screen right now. So this is one deposit basically divided by humans, not divided by nature, and named by humans as the AntaKori deposit, which is a better name than the one I mispronounced just 7 seconds ago. The 2019 resource estimate here shows a strip ratio of below 1 and 2.3 million ounces of 0.3 grams per ton gold, 61 million ounces of 7.5 grams per ton silver, as well as 2.6 billion pounds of 0.5% of copper in the indicated category, and a comparable amount of gold, copper, and silver in the inferred category as well. So basically, yeah, you can practically double it, I suppose. There are metallurgy question marks maybe that we'll have to get into further on in the conversation, as well as other considerations around the geology and the potential expansion of this project, as well as obviously the corporate accountability of the 2 companies, and then the royalty aspect of it all. But again, I won't bore you to death with all that right now. And John, actually, this might be a good point for us to kick off the conversation. What is the royalty? What's the royalty situation on the project as we speak now?
Well, as you mentioned, we have about a third of this very large copper gold sulfide deposit. So we have 1/3, and the other 2/3 is held by the Comalaiche joint venture, which is Buenaventura Southern and a company called Espro that are operating the Tantuatai mine, which is mining the oxide cap over this very large copper gold sulfide deposit.
Mm.
Our land position is one that was assembled from a lot of old mining claims. And so there are variable royalties on these that range up to 2%. But in many cases, we have the ability to buy those back. We've also established a very creative agreement with the Cisco Gold Royalties. We consider, in addition to Rio Tinto and Route 1, we consider Cisco Gold Royalties to be a strategic partner for us on this project. They don't own an equity interest in the company, but they have provided us with funds to advance the project in exchange for a rather creative deal that was put together by Adam Greening, our Senior VP for Corporate Development, whereby if we buy back a royalty from one of the underlying royalty holders, Cisco Gold will pay 3/4 of the acquisition cost. We'll pay 1/4. They get half of the royalty, and the other half of the royalty we extinguish or remove. So we're systematically going through and discussing with the underlying original claim holders about acquiring these royalties and effectively cutting them in half. In a strange way, we have an agreement with a royalty company whereby they pay us money to reduce our royalty and formalize the remaining royalty into a modern royalty held by Cisco. So it's a pretty creative deal. So not an excessive burden at all, and one that's being reduced through this agreement that we have.
Well, I've been looking at obviously your group and what you're doing, including your work with Aldebaran and whatnot. I've been thinking, wouldn't there be a possibility for you to maybe spin out a royalty company or something like that, where it's all the royalties around the companies that you're involved with, sort of put into one company, just something more creative of that nature? Is that a possibility that you'd explore?
There's always a possibility on that. That's increasingly being sought by groups doing what we do, is that as part of a transaction, we're asking a major mining company to acquire a deposit from us to invest a large amount of money to put it into production. So there's a lot of risk on their standpoint on what they'd like to pay for it, which means that the payment made for a large deposit like this is perhaps not as great as we'd like to see it be. And so then that enters in the possibility of putting a royalty in there as well. We wouldn't rule that out going forward, but currently that's not in our plans at the moment.
Well, yeah, you're right. I suppose in the plans for the moment, the most viable path forward would be with Tanta Huate. I mean, just basically combine the company, right? That's the entire idea.
Well, there are a lot of different ways. What maybe I can step back and describe our strategy overall, so we can see how this fits in. But we're a group of seasoned explorationists that we've had a long time, as you can tell from my hair, a few decades wandering around in the Andes. And so we have a awareness and knowledge of a number of interesting projects in the Andes. So our strategy as a junior company is to identify projects that have potential to be extremely large copper deposits, and not just large, but also economically robust. And so we're looking for a prize that would be of interest to a major mining company to acquire from us. So our strategy is to identify these projects before they're fully revealed, acquire those, drill those out, show the full size potential of the project, and then de-risk it through about a pre-feasibility stage. And then ideally, we sell that project to a major mining company when they're looking for opportunities to go forward. It's a strategy that's been well employed by Ross Beatty and his Lumina Copper Group, the Lundin family. A number of other juniors have operated in this manner. So it's one that Regulus is actually our second of 3 companies we've had with our same management team. Our first company was called Antares Minerals, and we made a similar nice copper discovery in southern Peru that we drilled out and sold the first quantum for $650 million in 2010. So we've executed this strategy once. As a part of that sale, we spun out Regulus, which is now back onto a really interesting project. It's a big challenge for us to identify these projects. They're more and more difficult to find out there. So we feel very fortunate that in Regulus we have our hands on a very nice project. We in parallel run a second company called Aldebaran that's on a very nice project in Argentina as well. So we have 2 companies, each of which have their hands on a nice large copper or copper gold deposit. And then one of the other important elements in this is we can have a great deposit. We can be in a good position to advance it to show the full potential, but we also need to be in the right moment in the market. And what's really exciting for us right now is that we're seeing copper price rise. There are a lot of groups that are predicting significantly higher copper prices over the next few months or years on this, as there's an increased demand for copper for electrification of just about all aspects of society right now as we try to reduce our carbon consumption in the world. And so we're kind of entering into that sweet spot where copper prices go up. The type project we look for doesn't need a higher copper price to be viable, but when prices are high, the copper companies are producing a lot of profits, and they're highly motivated to look for growth avenues, and that's when they start to acquire deposits. So I think our timing is very fortunate right at the moment that we've put our hands on a project. It's one that's advanced to the stage where groups can begin to see the full potential of the project, particularly when combined with what our neighbors have. And we might be entering into a spot where major companies are highly motivated to acquire an interest in such a project. So it's a complex project, as we've discussed, but it's a heck of a prize on this one, and I think the timing's working out pretty well right now.
That's something that I obviously want to talk about, sort of the strategic aspect behind it all and the relationship between you and those neighbors.
Mhm.
And I'm mostly wondering about how much information about them and their operation you're getting, and how much do they share with you when you guys talk? Because it's harder for the public to get as much information on them, right? So that's where I'm coming from.
Yeah, and I have to understandably be cautious because we have confidentiality agreements. Typically, is the relationship we'll have with a group like our relationship with the neighbors or other groups that are evaluating us as we move the project forward on this. So I have to be a little cautious on what we can do. But what I can do is point to agreements that we've had that have been publicly revealed in the past. So when we acquired this position, we picked up a piece of ground that was tucked right next to an operating mine. And it was a very interfingered line position, not even a simple straight line boundary between our groups. So there was an immediate challenge on whether we could even get access to our ground and drill it to go forward. So we entered into a rather unique agreement with Comalaiche, the joint venture that operates the mine next door to us. It's probably best described as a collaborative exploration agreement. It was an agreement whereby they did not earn an interest in us, nor did we earn an interest in them. We simply agreed that we would share data across the boundaries so we could each see what was going on next door. We would share access. So if we needed to drill our ground by passing through their ground, we'd have permission to do that. And that was a 5-year agreement, and that allowed us to drill out our deposit. And you might ask, why were they so nice to us? Why did they agree to this? In exchange for that, they received the rights to lay their operation back onto our ground. So we don't have oxide mineralization of significance on our ground. That's mostly on the high ground next door. But they had some of their mineralization trapped. They couldn't get to it if their pit didn't lay back onto us. So we allowed them to lay their pit back onto us. They paid us a royalty for any gold that was produced from our ground in exchange for us being able to drill our deposit out and see what we have. And that allowed us to better understand the overall district. So that's an example of an agreement that's out in the public. We interact with them regularly. We're immediately next door to them and share a lot of infrastructure. So we coordinate our activities with local communities and other things going on. There's a high degree of communication between us and primarily Buenaventura as the operator of the joint venture
Yeah.
next door.
What I'm wondering, what I'm thinking about here is the information parity between you and Buenaventura, because I'm just basically wondering who's got the information upper hand, if you will. Like, can they sort of weigh you down, wait for years and years and years before committing to something, so that because you're a public company and because your share price dictates a big part of the health of the company, if you will. So that's where I'm coming from with these questions. That's what's going around in my head.
Yeah, you're hitting right into the heart of our challenge right now is that we really kind of already know what we have. They have a pretty good idea of what they have on their ground. The clock is ticking a little bit in that the oxide mine does run out of ore in a few years. And the easiest opportunity is to make a transition into a much larger copper gold sulfide deposit. And you don't do that from one moment to the next. So that needs to be started soon. And certain elements of it are already underway on either side of the property boundary right now. So that's provides a lot of motivation for us to go forward. There is the possibility that they could close the mine and starve us out and wait on that. But I think that's countered with a missed opportunity on their part. Really, we believe the best way to develop the project going forward is some type of a consolidation of the district. And then that allows the flexibility to design an optimal mine that is most profitable moving forward and a larger scale project moving forward. If you are constrained to one side of the property boundary or the other, it means that you may be developing a project with less return for investment on it and jeopardizing the overall development. So it's very logical to move forward, but as you can imagine, it's quite a chess match right now in terms of how does that happen. They're a joint venture of 3 companies of very different sizes. We're a junior with a strategy to monetize our interest, and it would be logical to assume that a lot of major copper and gold companies are taking a close look at us right now to see if acquiring our part of the project might make some sense and how that would go forward. So there's quite a chess match going on. I can't get into the details of that by any means at all, but it's certainly one that will be well on the radars of most major copper and gold companies that are looking to acquire these type of assets moving forward.
Could you get into maybe some of your hopes or speculations about a timeline, though? I think initially you had expected this to happen quicker, but how do you feel now? Is this more of a 1 to 3 year thing or 3 to 5?
In this business, you're always expecting it to happen more quickly, and investors naturally would like to see a return more quickly, but it does require a little bit of patience for everything to come together on this. As I mentioned, we do have certain elements that kind of give us an idea of when we're entering into a window where something's more likely to occur. One, the mine next door is running out of ore in a few years. So that really means that the smoothest transition on this would be finishing off those oxides and then making a transition into a much larger, what we call a multi-generational mine. It's one that would last for 40, 50 or more years. So it's going to provide a lot of benefits for the communities in the area. If the mine next door closes, the mine and the Cerro Corona mine of Goldfields, which is 7 kilometers away, both are reaching the natural end of their mine life. And both of those mines provide a lot of benefits for the communities in the area, either with direct employment or indirect benefits from service provision and items like that. And so the communities benefit from those. If those mines close, that's going to stress the local communities quite a bit. But there's a very nice solution here of making this evolution into a much larger mine that lasts a long time. So it would work out very well socially with the communities to make this transition. And it's always easier to make a transition from an operating mine to a larger, different style of operating mine than it is to close one and then face closure costs and then restart the whole process again of permitting to go forward, perhaps with communities that are upset that they've been through a boom and bust cycle. So there's a great opportunity for this to move forward, and almost all of us involved in the process right now realize that timing is important. So that I think makes it more likely that something will happen in the district relatively soon. As I mentioned, rising copper prices and gold prices were at all-time highs on gold and nearly that on copper right now. Also move us into the time when people are looking to put projects like this into operation moving forward. We know a lot about the size of the deposit between ourselves and the neighbors on it. So it's entering into that moment that we usually think of everything's kind of lining up and being the right moment to move forward. We're also seeing the emergence of some additional players that can be visible in this moving forward. We've mentioned that Buenaventura is the operator of the project next door. They have 40% of the project and operate. They've recently had Antofagasta Mining acquire 20% interest in Buenaventura. And so they're doing that as a large copper company, primarily interested in the copper assets that are held by Buenaventura. So that's revealing their interest in the process. So that's an interest in Buenaventura overall, but they certainly are well aware of this project and the potential that it has moving forward. So all of that is creating a situation where I think we're we have to be careful about throwing out time frames for everyone on this. But I think we're really looking at in the next year or two for well, that's the opportunity for all of us that are involved in this to really to make this transition into a project that will provide benefits for any company that's remains in the project, any company that decides to monetize their position, and particularly for the communities in the area. We really want to maintain that social license in the area by providing long-term benefits for the community. So I think this one looks more like it's the 1 to 2 year range, and certainly not the 3 to 5. But that there are a lot of major worldwide events that could control metal prices and other sentiment that we always have to be aware of. But this one is closer than farther away.
And it's, well, we have to be stoic about this, and you control the controllable, right? In this case, but when you mentioned a couple of years that they run out of ore in a couple of years, like, is that in the literal sense in 2 years, or when do they actually run out of ore?
Well, what always happens on an oxide, most operations, but particularly an oxide operation like this, as metal prices go up, you reevaluate what your cutoff grade is. And so an increasing metal price perhaps can extend a mine life for a little bit. You can always reprocess material. You can always extend that out. But in most cases, when you're reaching that situation, your production's dropping off, your employment's dropping off, the profitability of the operation's dropping off. And so it's best that you go to Buenaventura's public information on this to see what their latest prediction on their mine life. But we're talking 2 to 3 years is generally what they've been projecting in terms of remaining mine life on the project. There's a little more information on Cerro Corona nearby, and in less than 2 years they stopped mining from their pit, primarily because, as you mentioned, they run out of tailing space. And then they pivot and they begin to backfill their pit with tailings, and they process low-grade stockpile ore. So at that point, they'll see a big drop-off in their production and a big drop-off in the employment opportunities at the project, because they'll no longer be mining, they'll just be processing stockpile materials. So, and that leads to an eventual closure of the mine by about 2030. So I think all of us working in the area would really like to see an opportunity for people to continue to work in the mining industry and receive the benefits from a large, modern, safe mine in the area going forward. So we do this as a business, but it's also important for us to see that the results of our work provide long-term benefits for the people in the area we're working.
And forgive me for asking maybe that many questions about your neighbors specifically, but I'm sort of trying to understand obviously their angle of the story here, because there's basically two major events that I wrote down for them. They're planning, if I got that correctly, they're planning an economic study by the end of this quarter. And then there's also the Antofagasta involvement. How do you think these two things, related or unrelated or combined or uncombined, how do you think they complicate or maybe even make things easier for you to close a deal here?
Once again, I do have to be a little careful on what I say on it. So I'll refer to public information on what they have out there is the best I can do. So I'd advise people take a look at what they're revealing publicly, and interpret that the way they do on that. But I can say that having Antofagasta step into this is good news in most senses, and that it reveals the potential. Antofagasta wouldn't be taking a position in Buenaventura if they didn't feel that there was a lot of potential in their portfolio overall. Buenaventura has many projects, most of which are precious metals or lead zinc projects, but they have some notable copper assets in their portfolio, and that is most logically what Antofagasta would be interested in, is their copper assets. Not exclusively this project; it's one of several that they have.
Right. Okay. But it doesn't necessarily complicate the relationship between you and Buenaventura, given you Rio Tinto and them Antofagasta, like sort of a battle of the titans, if
Well,
you
and then
will.
we have Southern. This one's a remarkably complex chess match on how it goes forward. But what I usually do in a situation like this is drop back and take a look at what the asset is, and we could all position and try to do things and not make a decision to go forward. and we would all lose on that proposition. So the most logical scenario here is that there's a consolidation of the project moving forward, and that's just such a compelling story there that I have confidence that that will happen. Now, how it happens, there are a lot of different pathways this could go forward, and
Mm.
it'd be irresponsible of me to telegraph or indicate a certain thing on this, but we're exploring all avenues to fundamentally what we look for is what's best for our shareholders, and our shareholders are aligned with our strategy of we don't necessarily want to become a miner go forward. This is a bit of a different case on it because we believe strongly this will be a very large mine moving forward on this. Is that you mentioned the idea of a royalty or something like that. We're open to ideas on what's the best pathway forward, but we're conscious that most of our shareholders would like to receive a return on their investment sooner than later. So the most logical scenario would be that we would sell our asset to one of several interested parties in the complex dance that we're involved in here.
Are there any comparisons that you can give me, maybe geological, but also corporate comparisons where that happened in the future, like a comparable deal happened in the future? Just something to sort of wrap my head around how this might look like. That happened in the past, not in the
Well,
future. I'm sorry.
this one's a bit unique. It's a bit different. But one thing I can point to on this is that increasingly we're seeing these large projects that we intentionally look for. Um, Even if there's 100% ownership of the project, it's one consolidated unit. We're increasingly seeing these projects being developed by a consortium of majors. So
Mhm.
Antamina would be a good example where you're seeing multiple large companies pairing together to move a project forward. And that's just sharing risk a lot of times. These projects are fantastic deposits that last, as I mentioned, for decades and decades moving forward, but they require a large amount of capital to develop. And so it's increasingly common that we're seeing multiple major companies team together.
Mm.
And so our position could be of interest to a group to participate with others in the project. I doubt that there will be one company that manages this whole project. It'll most likely be several major companies with the capital that's required to develop it to the most optimal scale on the project. And it also opens up the possibilities. We in many projects like this, we see companies that are non-traditional operators but want to have participation in a project. So you could imagine any of a number of the Asian smelting companies that like to participate in a project, but they're not a natural operator, but they can provide capital to develop and they partner well. You look at most major copper deposits, and it's not uncommon to have a Japanese smelting company financing part of the project moving forward.
Mm.
So it's those type of relationships are possibilities as well. So we don't have to look to say one company consolidating the whole district. We could look at some participants in the district now would quite likely like to continue in the project. Others like ourselves, it's not our natural wheelhouse to do that. And so it would be more logical that someone replaces our position and brings the capital to come forward. There's also an interesting twist on this one in that even though it's dominantly a copper project, probably 2/3 of the value in the project is copper. There's very significant gold involved in
Mhm.
this. So just the portion of the resource that we can announce, that's over 4.5 million ounces of gold as a secondary product in the
Mm.
project, just to put some scale to what we have, and we only have maybe a third of the overall project. So you can see this is an extremely large gold deposit that happens to be in the same place as an extremely large copper deposit. So that opens up the possibilities of maybe a copper company and a gold company teaming up on it. There are a lot of different angles this could go. So we're going to have a very fun year in front of us right now as we navigate through the best way to maximize the value for our shareholders on this.
I think you bring a very interesting point here is that a lot of times these things, you look at them sort of with hindsight and you think like, oh, that makes sense. This consortium of companies there makes sense. But you wouldn't have come up with it in almost any way if you tried to think about it beforehand. And so it only really makes sense after the fact because a lot of things happen below the surface that, you know, typical sort of internet plebs like myself don't necessarily get to see. But I appreciate the overview there, John. I don't mean to push you any further or put you in any sort of
No, I understand everybody's natural, and I wish I could talk about everything that's going on. We just have to respect confidentiality and be careful about what we say.
Of course, yeah, and I wouldn't put you in any compliance troubles or anything like that here. Let's talk about what's happening then on your side of the story. Newton, interesting metallurgical work happening there.
Yeah,
You doing more of that in 2024, or what do you think?
yeah, we've entered into an agreement with Rio Tinto and their Newton division. And for your listeners that are maybe not familiar with this, when we look at a very large copper deposit like this, there are two general styles of mineralizations. One's what we call secondary mineralization. It's weathered, it's partially remobilized mineralization near the surface. And then there's primary unweathered material at depth. And the secondary mineralization you can process by heap leach technology. So you take it, you put it on big pads, you leach it with a sulfuric acid solution, and you produce pure copper cathode on site. So it's a very low cost way to process material that produces copper on site. You don't involve a smelter, you don't involve the transportation of getting a concentrate to a smelter, you don't have tailings. So if you can, you process material that way. But the bulk of the mineralization in a big copper deposit has always required milling and concentration in producing a concentrate that then is transported to a smelter that's often across an ocean from you. So it's much more capital intensive moving forward. Rio Tinto believes that they've developed technology that will allow them to heap leach the primary mineralization as well. And they've packaged this into a new group in the company called Newton. And they're commercializing this, and they've begun to enter into agreements with a number of companies like ourselves to test this technology and see if they can apply it to the projects we're involved in. So if they can do this, it can take a project that's already a quite interesting looking project and make it much more interesting because it reduces that capital cost on the project. It has some very interesting potential ESG benefits to it as well, in that if their technology works on the project as well as they believe and we believe it'll work, it uses a lot less water. It uses significantly less power per unit of copper produced. So it's very, very exciting for us in the copper space that copper is viewed as a green metal. It's viewed as an important part of the solution to moving to a lower carbon future via electrification of many aspects of society right now. But mining copper is carbon intensive. And so if there's a way that you can mine copper more efficiently, more friendly in an environmental sense, then that makes tremendous amount of sense, and particularly when it allows you to do it more profitably at the same time. So this technology has some extremely attractive potential benefits to it. It also sequesters or stabilizes arsenic that's in the deposit into a non-soluble form, which solves one challenge we have on the project as well. And you don't produce a tailings, and tailings are a costly component of a large milling operation to manage, to make sure that you have your tailings contained and you don't have a tailings disaster in the future going forward. So this technology, I think, offers not just for our project, but in general in the industry, offers some pretty exciting potential. Most major copper companies are pursuing their own version of this. Rio Tinto just feels that they're farther along on this and have decided to commercialize it and go forward. So we're very pleased to be involved with them on this. They put a placement into us, which has provided us with funding to move forward on the project. And at their cost, they're conducting column tests right now to test the material to see if their technology will work on the project. And that program will take to about the end of this year. And when the columns are concluded, we'll be able to publicly release the results of that information. So we're very much looking forward to getting that work completed and seeing, because it'll dictate their interest in the project moving forward. And we think that it could be a pretty exciting avenue on how we could pursue the project moving. So a lot of what we're doing right now is we're not actually drilling anymore on the project. The project's large enough to easily capture the interest. An example of this is our geos are pushing to continue some drilling to the north where we have open mineralization. It'd be great to find more mineralization there, but when we look at it closely, it would be in year 40 or 50 of a mine life. So it really doesn't add too much value to the project now.
Hmm.
And we have a sufficiently large project to catch the attention of all the majors at the moment. So much of what our work is right now is focused on working with the local communities, putting ourselves in a position to acquire surface rights that are important for the project moving forward, beginning to take a look at where water comes from. It's not very exciting work. It doesn't produce the headlines that move a market, but it's very important of what we consider the de-risking process of the project. And that type of work makes a big difference to groups that are evaluating us.
Of
Because the
course.
more of that we do, the more easily they can envision a project moving forward.
I do want to talk about some of the community stuff and maybe a little bit about the arsenic if we have a chance later on. Though
Mhm.
I know we don't have too much time left. But so you pay for the tests on the
No,
Newton or
no, we
okay?
don't. We provide the samples, and Rio Tinto at their cost does all the test work.
Because I was just wondering how important that relationship is to your overall relationship with Rio Tinto. Like if you wanted to do a different technology, would that offend him, or would it complicate the further involvement of another major? But as you mentioned, most majors have sort of their own technology, so that's sort of what
Mhm.
I'm thinking about.
Well, first, what we'll do is we'll focus on seeing how well it works and what that provides, and that'll probably dictate the logical pathway forward. Um, if if their technology turns out to not be the most optimal way to move the project, they will, in conjunction with us, evaluate other ways to move the project forward. We don't need this technology to work to have a very good project. Just conventional milling and concentration, and then post-treatment of the concentrate are perfectly viable ways for us to go forward. And
Hmm.
most other groups that are evaluating the project don't have the benefit of Newton technology, so they're evaluating it in a more conventional manner. This just has the potential to take a very exciting project and make it even more exciting if it works well. So it's a good example. They developed this technology heavily on a project that they have nearby called La Granja. And so it's the technology was developed on rocks very, very similar to what we have. And so I think there's very good reason to be optimistic that this will work well.
Hmm.
And that kind of loops back to your question on timing. We and Rio Tinto would both like to see the results of this because it could provide a pathway to a more profitable development of the project going forward. And we'll have those results by the end of this year, which kind of coincides with what I mentioned of timing of the remaining life of the oxide mine next door and the importance of making that transition. We're seeing all of the key components of information that we'd like to see come to fruition. The last missing piece we'd really like to see is to have a more robust copper price. Not that we need that price, but that price generally motivates more M&A type activity in our space.
Right. Given the grade of the deposit and the scale of the deposit too, as far as I understand it, the arsenic that you have in the sulfide cover there is not necessarily, I mean, it's obviously not a major issue, but it is an issue, right? And so,
It absolutely is. And when we take on a project like this, our strategy on this is to identify the biggest challenges that are there and then understand them and develop solutions for them. And when we first entered into this project, arsenic was the potential Achilles heel of the project.
yeah,
There were two really, arsenic and the complexity of the land situation, which we've talked about quite a bit. It's been very interesting in that it's taken us a while to mature this project and get it to the stage that we're at right now. But in that time frame, we've seen most of the major companies become more comfortable with managing arsenic in large deposits. It's partly because the arsenic contents in copper project worldwide are going up for the most part. And so smelters and mining companies have begun to face that and develop ways they can work with it. We've noticed we've actually had groups approach us interested in our project because we have arsenic, because they believe they have a solution. In some ways, that's how Rio Tinto came about on this, because they believe they have a very elegant solution on not only producing a more profitable operation, but also responsibly managing that arsenic moving forward. It kind of ties together rather neatly. But there are other groups, the gold groups overall tend to approach it by looking to an autoclave. So rather than effectively oxidizing your mineralization in big heap leach pads, they produce the concentrate and would put it into a large vessel that under high heat and high pressure rapidly oxidizes the material. It produces much better recoveries overall, particularly for your precious metals, which is important to them. But it comes at a very high capital cost to develop the project. So it's a trade-off between the cost to do it versus your recoveries. And there's this interesting approach from different ends on how you do it, which roughly breaks out to in general, the gold guys think pressure oxidation or autoclaves, and the copper guys think conventional with post concentrate treatment of it to eliminate the arsenic issue, or interesting opportunities like Newton on where you may be able to do that through heap leaching. So that it's much more. We receive very little. It's not an impediment to interest to the project right now, the arsenic levels we have, which 5 or particularly 10 years ago, it very much would have been. And now it's much less so. And there are similar projects elsewhere worldwide that are being developed that face the same challenge we have on arsenic.
I'm sorry for jumping through topics here, John, but I know that you almost have to go, and I appreciate the arsenic overview there, because I think it's oftentimes swept under the rug by people saying, "Oh, it's not a problem, don't think about it." So I
Nope,
appreciate the deeper
we like to wear
explanation.
them right out front. The challenges on the projects you put out there, you have to have them solved, or people are less interested in acquiring the project from you.
That's right. Are the locals one of those challenges? And why I'm asking you is because there was recently an attack on the infrastructure at the Poderosa gold mine in Peru. Not much
Mhm.
of a comparison there besides it being in Peru, but there's also been a long history of upheavals, if you will, for mining companies in Peru. So how is that influencing your communications with the locals?
Well, it's the relationship between stakeholders, communities that are nearby to the project is always one that we have to carefully manage. And it's
Hmm.
not unique to our project. It's true of projects worldwide right now. And even in cases where it doesn't look to be a big deal, it's still something you need to be very much concerned about. So we live the project. We live. I guess I live at the project, but the project is an area with not much agriculture right in the project area itself. It's higher ground, so it's not apt for agriculture. So we don't have people living on the project. We don't have very much grazing of animals there, so it's good in that sense. But nearby the project, we have a large number of people living and depending primarily on agriculture as a means for their lifestyles. And so particularly in the area that we're involved in, dairy farming is an important part. So it's artisanal production of cheese and yogurts is an important part of most people's lives. So they're naturally concerned about having a large mining operation nearby that could potentially affect the quality of their water or prices for their products and other things. So what we try to do is establish a relationship with these communities to help them understand what we're trying to do and the benefits it can provide, either through employment for people, make sure that they're comfortable that what we are doing or what we're projecting will be done on the project can be done without significantly impacting what they're doing. So a lot of what we spend time with now is just making sure people understand us, making sure there's open communication, making sure that they're seeing that we can provide benefits for them to go forward. And often in a case like this, it's it's work, but it's manageable work in the immediate area of the project because people can see those benefits more directly. The bigger challenge sometimes is slightly farther away. And people that live 40 or 50 kilometers away from the project aren't close enough to the project to receive direct benefits from the project, but they can be jealous of what's going on. And so that you have to make sure that the broader context is good for your project to move forward. So, and that quite frankly is a challenge in Peru at times because it's often presented as a concern over environmental issues or water issues, but fundamentally, it's people positioning themselves to protect their lifestyles and make sure that something's not threatening their lifestyle or they're receiving the most benefits they can from it. And so We work a lot on this. We try to do that in conjunction with our neighbors. And keep in mind, it's not just the two mines immediately next door to us. Newmont's Yanacocha operation is only 35 kilometers away. So we're in an area with a lot of historic mining activity, and so there's a lot of coordination between the companies to move forward in that
Hmm.
sense. Poderosa is kind of a different situation in that they've had a long and complicated history with informal or even illegal mining, and that has a lot of that conflict is a very special case related to that project.
Yeah.
So,
Kind of you to call it informal. What what about the higher level there, sort of region wise and then maybe national politics wise? How's that sitting with you?
right now, well, Peru, it's important for people to understand that Peru is a mining country. So like other mining countries, say Canada or Australia, mining is an important part of the country overall. So there's good awareness of it and the potential impacts and the challenges that are associated with it. But fundamentally, mining is well established. There's good precedent for how you go about developing a mine, how you move forward. And what's it's interesting right now, and that as we've come out of COVID, knocked around economies worldwide on this. As we've come out of COVID, the Peruvian economy is not returning as robustly as the government authorities would like, and everyone would like to see moving forward. And so the current government is very concerned about improving the economy. They're not seeing their GDP increase at the rate they would really like to see, and they fully understand that mining is one of the principal motors that can allow that to happen. And so right now you'll see at PDAC or other worldwide forums like this, a lot of discussion by Peruvian mining authorities of the importance of creating a situation to allow the development of additional mines um, to improve the economy of the country overall. And they're focusing very much on the trickle down effects that happen when you construct a large mine. Obviously, it provides good employment for a lot of people directly associated with the mine, but it provides a lot of additional benefits coming out from there, including the tax benefits that are provided to everybody that lives in the area. And so we're seeing in Cajamarca, the province we're in particular, it's been a province that, particularly over the last 20 years or so, at times has been a bit um, anti-mining almost in some sense. But now, as they're seeing mines like Yanacocha kind of wind down and potential closure of Tantuatay and Cerro Corona next door to us, they're realizing that they really would like to have the financial benefits from those projects moving forward. So new administrations, the governor and his team and Cajamarca are very much embracing the responsible development of mining to provide benefits to everyone moving forward. And at the federal level, they're pushing that very, very actively right now. There are also some just some natural competition going on, in that they've been the number 2 copper producer for quite some time,
Yeah.
trailing Chile distantly, but pointing out that there are probably more opportunities in Peru to develop new mines than there are in Chile. So they have aspirations of closing that gap with Chile. But at the meantime, they recently been surpassed by Conga and so they've fallen to number 3. So there's kind of a badge of honor there where they'd really like to increase copper production in the country overall.
Sure. Are you going to have any permitting news this year from a perspective of communities or anything regional or even national politics wise?
I don't anticipate anything particularly out of the box. I mean, it really needs to be resolved what the what who the future developers of the project will be before we start talking about permitting on it moving forward. So I don't think you'll see major news on that moving forward. If you follow our newsletter and other things, you can see a number of the activities that we're doing on the ground and see what's happening there. We've had some tremendous success in helping the local dairy farmers increase their productivity, which just has direct benefits to everybody involved, and that's been an incredibly successful program for us moving forward. And so that's a good point. They're not sort of news release type um, events that will move a share price in that sense, but they're incredibly important to the future of the district moving forward.
I agree. I think more companies should do stuff like that. How much of your time, by the way, goes into Regulus versus Aldebaran here?
You bring up an important point. Our same management team manages two companies. So we didn't intend to do that. It's tough enough running one company versus two. But when the opportunity came up to acquire an interest in the Altar project in Argentina, Route One is one of our principal backers, and some of our other shareholders have always encouraged us to watch for additional opportunities out there. These beasts are increasingly hard to identify and capture. And so when we flagged that as a potential opportunity, they provided funding for us to acquire the project. And at that time, it was best for us to split into two companies. In 2018, some of our Regulus shareholders loved that we were working in Peru, but were very uncomfortable investing in Argentina. It wasn't a mining country. It wasn't so clearly a place to be involved with. That's switched dramatically now. Argentina is emerging as a new potential mining center going forward. But it was best for us to split into the two companies. So the amount of time what we did is we just increased our bench. We increased our management team by bringing on our first time around, Kevin Heather, who's our Chief Geologic Officer, and Mark Wayne, our Chief Financial Officer, and I really were kind of running a pretty tight ship on moving forward. Now with the two companies, we've added some additional components that make us a stronger team, and we have the benefit of flexing people back and forth between the two projects. Personally, I'm probably more involved in Regulus, mostly because it's more negotiations, it's more strategy, it's more moving forward. Our technical team is more involved in Altar, in Argentina, where we have 4 drill rigs active. It's much more active in terms of an exploration project, but that varies over time.
Good. Good. Well, John, I really appreciate the overview here. I understand that you have to go, but again, I'd be happy to keep following along with the story and getting updates. So thank you so much for investing your time in me. What am I forgetting to ask you here, though, at the end? What did you come here hoping to talk about, but I'm failing to bring up?
I mean, probably the biggest event that's happening right now that many investors need to be aware of is that we're finally seeing this shift to more positive investment environment in juniors, particularly in the copper space. As it's been interesting for us over the last 2 years, really, where we have a lot of interaction with major companies, and they're very motivated to be looking for new projects moving forward. Rio Tinto, we have a strong relationship with them, and I can point to their public disclosure where all the way up to the CEO of the company are telegraphing they need more copper projects. And so when we're talking to them, they see what's coming. They see that there's a looming significant shortage of copper production, which will need to be filled to go forward. And so they're highly motivated to get projects, and there's no discussion about the importance of copper going forward. For retail investors, there seems to have been some hesitancy over the last 2 years. When we describe that same situation to people, the logic makes sense. Everybody agrees and says, hey, that's great. But I think everybody's been kind of waiting to see it happen, which is just natural. You don't want to be the first one to start. And you may agree it's going to happen, but you don't know if it's going to happen in a month or if it's going to happen in 2 years. So what I think we're seeing in the last month or two on this, as copper's cleared $4, we're starting to see that move, and we've seen a notable increase in our share price, partly due to recognition of the situation we're in with a likely event coming at some point, but also because of this increased copper price. And that's kind of a snowball effect, because what we're seeing now are people that didn't want to buy shares at 90 cents are suddenly interested in buying shares at $1.50 because they see it starting and they see it happening. And that's just a psychological. We see that in markets of many different commodities, that people are hesitant to jump until it starts. But when it starts, it can move very rapidly. So it's a good moment for people to be paying attention. With new all-time highs in gold, we're also seeing many of my peers that focus on gold exploration are suddenly having smiles on their face because there's funding available, and we're starting to see projects move a little bit. So I think we're seeing more of a risk-on environment and more interest in the commodities, particularly copper, but gold as well. And so it's a good time for people to be paying attention and identifying the best opportunities they have in an overall rising market.
All right, John. Well, I really hope you're right on the timing of this. But either way, I appreciate your time, and thank you so much for sitting down with me today.
Great. Thanks, Antonio.